Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Tuesday and from the United States, we'll be waiting for the following economic headers to be released. The Red Book month-to-month and year-to-year, Richmond Manufacturing Index for month of September, and the CP Consumer Confidence for month of September with high importance. That's all for the economic calendar. We'll move on now to the numbers. On the last trading session of Monday, we have had a trading range from 1510 to 1526. Numbers are rounded and the market is still open. Gold spot is expected to print a close price above 1523. The number is rounded and the market is still opened. Gold is trading in a bullish trend above its all daily simple moving averages, and it's seen right now in terms of momentum uptrending. And for the RSI readings, we are overbought on the weekly chart and monthly chart with somehow moderate readings. And for the support levels, it's 1518 followed by 1510 and then 1506. And for the resistance levels, it's 1524 followed by 1531 and then 1540. That's all for the numbers. We will be moving now to the trading strategy. In our episode for tonight, we are going to talk about some history. In 1944, and after the World War was set to end, the United States hosted a summit with the participation of most of the countries around the world, and with one purpose. The proposal from the United States was to let the US dollar to be the reserve and settlement currency, and to be used internationally between countries to exchange products and services. And with the commitment from the United States that each one printed US dollar should have its value of gold under the custody of the Federal Reserve Bank of the United States. And whenever a country wants gold in exchange of US dollar, they will get it right away. Things were perfect until 1955, and when the United States interfered in Vietnam, and that move wasn't well calculated. The United States pumped so many troops and military equipment, and the war took longer than expected. It was about 18 years, and after that the war did not reach to a conclusion, and the economy of the United States was drained up because of this war. Amid of the ongoing war, the United States printed US dollars without gold coverage as agreed upon with the rest of the world in 1944, and France discovered early that the United States does not have gold to cover the US dollar supply, and asked for gold in replace of the reserves of US dollars. The United States response was short. They told them, you got the dollars, you like it, keep it, you don't like it, burn it. And France's response was to announce to the rest of the world that the United States does not have enough gold to cover the supply of the US dollars, as agreed on 1944, as we said, which forced the President of the United States, Nixon, in 1971, the end of the gold-backed US dollar era. Call it luck, call it smartness, call it conspiracy. In October 1973, the Egyptian army, and at its own, passed through the Bar-Lev defense line, which separates Israel from Egypt. The support line, which was supposed to delay any invasion for weeks, fell in 6 hours, and the United States ran to rescue Israel from its Arab neighbors. At that time, Saudi used oil for the first time as a weapon let's say they weaponized the oil and declined their production drastically, forcing the United States and Israel to accept to end the war at agreeable terms with Egypt. And the King of Saudi, if I'm not mistaken, Faisal, was later on assassinated, and the new king agreed to transaction oil in US dollars only, and the barrel price jumped from $3 to $12, and the oil became the black gold. Then the US dollar, as a result, restored its strength as a reserve and settlement currency. This was a historical brief of the United States and its history and relationship with gold. Since the link between US dollar and gold has been removed, gold has been appreciating against the US dollar. And the US dollar was losing value due to the rising debt of the United States, which was caused by the wars that the United States managed to get itself dragged into: Afghanistan, Iraq, and also because of the so many wrong financial decisions that has been taken over the course of the time. And take one example of this: keeping the interest rate nearby zero from 2011 to 2018, which is 100% absolutely wrong. In our last video, we said gold shall continue rising, and though it opened in a gap down, it rose eventually about $15. If you bought it, you made money. I advise you to buy silver, and I said this is the deal of the week. And if you bought it, you made 5%, because silver made 5% today without hesitation. Also, I advise you to short pound and USD GPY, and both of them went down. And for the crude oil, nobody knows what's going on into that market. We had a gap up in the open, and then the gap was filled, and then we got the 200 days EMA was broken and gave last week. Then it rose back to above 58. It's now about 58.50. I believe it has to hit down to 55. This is my belief. I'm not buying this. For tomorrow, do the same. Short the rallies in the USD GPY and the rallies in the GBP USD. Buy dips in both gold and silver. As long as 20 is not achieved or reached by silver, it's safe. And as long as 1546.6 is not reached or achieved by gold, gold is still safe. Manage to clear your exposure in gold and silver before Thursday, because this is the quarter end and the month end. We have some charts to have a look at. I said in our last video that this year is different, and I'm going to prove to you that it's different. This is the PE ratio chart. PE stands for the price per earnings. Usually, or the average, it should be 16, means 16 years needed for the earnings to cover up the price of the share. And as you see, whenever we peak above the 16, there happens a crash in the financial market. We peaked first in 1929, and we crashed Great Depression. In 1970, Great Depression. In 2000, financial collapse. In 2008, financial collapse. And now we are on a peak. And this is very good for gold. The second chart is about the margin debt versus the growth in the stock market. And whenever we peak, as you see here, we peaked in 2000, there was a collapse. We peaked in 2008, there was a collapse. And now we are also on a peak. Actually, we are in the biggest ever peak in the margin growth versus the stock market growth. So keep this in your mind, because this is also healthy and good for gold. Finally, he talked so many times about the debt of the United States, and we said it's $22 trillion, but talking something and seeing something else. Also, the President of the United States himself said the matter of the debt has to be addressed at the earliest. This is a visualization of the $20 trillion debt worth of debt for the United States. If you will get $100 bundles of cash and stack them on top of each other, this is what you will get with the $20 trillion. That's all for today. Thank you guys for watching this video. Please share, like, and subscribe, and I will see you tomorrow in another video.